breakdown, and in today's video we are going to take a look at the Nasdaq, the Dow Jones, the SNP500, as well as GBPUSD, EURUSD and gold. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis, and if you enjoy the video, a thumbs up would be appreciated there as well. Before we get started, I just want to give a special thank you to the members of the channel: Cal, Teswell, Mr. Vic, Retumechi, Nathan, Justin, Logan, Richard, Yazid, Jack, Hoshi, Andrea, Buwoke, Siambonga, Lunkile, and Ilya. Really appreciate the support on the channel and for everyone that's taking out the time to watch the content as well. Now, we are going to look at the fundamental data first, and as you guys remember in the last video that I spoke about on Thursday, I said that we are waiting for the ejectional symposium to take place, which was on Friday. It's basically a conference where Powell comes out and he speaks about the country's economical situation. But if you do want the full update, or if you do want to watch it, it is available on Wall Street Journal. Yes, the whole Wall Street Journal is available on YouTube, so you can go and watch the entire sectional symposium. So I'm not going to go through all of this, but all you need to do is search for Wall Street Journal, and you'll be able to get the entire conversation that Powell had on there as well. Now let's just jump straight into the data there firstly. Now before we get started, it's important to understand that we have some the fundamental data coming through this week here as well. So we do have the consumer confidence, we have the JOLTS job openings, we've got the ADP, which is the automated data processing. We also have the PMI purchasing manager index, we've got the NFP, which is probably the main contributing factors to look out for this week as well. Now the most important question that I got was from people was, can you please explain why the stock market or the Nasdaq took such a massive dive yesterday? Now, if you guys remember the video I did on Thursday, I basically told you guys, if I explained it to you guys, that when the market was sitting at this level over here, and I said that we can expect the market to continue higher and then potentially start dumping to the downside, and I will leave a link to that video in the description below, or just go check out the last video that I did. And that is exactly what the market did, basically fill in the ejection hole, which is what I said on my Instagram there as well. So I'm going to give you an update. I'm going to give you guys an update so you can know exactly how to trade the market this week there as well. And we've got some quick fundamental data to look at here. Report from CNBC. Powell warns of some pain ahead as the Fed fights to bring down inflation. Again, it's important that you guys watch the entire video, because I still have people asking me like, what does it mean, like what is inflation? And most of the time I explain all of these things through the video. So it's important that you guys watch the video from the beginning to the end so that you can understand exactly what it is that you need to look out for in the market as well, and it will help you become a successful trader in terms of how to read fundamental data as well. So basically what he is saying over here is, and I don't want to spend too much time on this, it says Fed Powell on Friday pledged that the central bank will use their tools forcefully to attack inflation that is still running near the highest level in more than 40 years. In the annual Jackson Hole Wyoming policy speech, Powell added that higher interest rates likely to will persist. We know that the remarks come amid the signs that inflation may have peaked, but it's not showing any signs of a decline. So we know the CPI data came through lower, but that does not mean that the inflation is starting to cool down as well. Now it says over here, I just want to go here. It says here, while higher interest rates, slower growth and softer labor market conditions will bring down inflation. And like I always said to you guys, like in the last video, I said that they have to increase interest rates to lower inflation. And you can see this is what Powell just said again. I think I should sit in the that should have been there in the Jackson Hole Symposium. In any case, they will also bring some pain to households and businesses, he said in prepared remarks. These are unfortunate costs of reducing inflation, but the failure to restore price stability would mean far greater pain. If you don't know what price stability is, it's basically when the general level of prices in the economy avoid significant fluctuations, meaning they don't rise or fall drastically in indexes of prices like the CPI or the harmonized index consumer prices, which is also known as the HICP. With that, the Dow Jones fell more than 500 points. Treasury yields were off to a flying start. And this is exactly what I said to you guys on Thursday. I've explained this so nicely, and I still didn't understand how people could not see this coming there as well. The minute Powell was speaking about tighter monetary policies and all of that stuff, the market took it down. Now it's time for a good look at how we can use that data to trade the market this week. Now we're going to start with the Nasdaq on the monthly time frame. What do we have? Now we can see the market is now aggressively testing and rejecting this level over here. This level over here acted as a strong level of support. The market broke below that, came back to test it as resistance. Market to make this massive impulse. So after an impulse, you expect a correction. And if you take your Fibonacci from the high to the low, you can see the market tested, rejected the 61.8, as well as the previous level of support that is now acting as resistance. Now, if we do want our next target level in the market, all we basically need to do is take our Fibonacci from the high to the low of that level, and there's a high possibility that we can expect the Nasdaq 100 to drop down lower and test this previous low that it created there as well. Here on the weekly time frame, what do we see? Now from a weekly perspective, it's very clear that the market had now broken below this overextended W, the overextended W's left leg. So this level over here acted as a level of resistance. The market then broke above resistance, came to test it as support. Support did not hold, so we can expect the Nasdaq to slightly pull back in next week before that continuation to the downside. Alternatively, like I said, we'd still have a deeper pullback for the market to go and reach over here before we can look for continuations to the downside there as well. Next up here on the daily time frame, what do we see? Now from a daily perspective, well, it's very clear that we can see the market is currently stuck between this level over here. This level acted as a strong level of resistance. The market came back testing it as support, and the market now also most recently broke below the strong level of support that is now acting as resistance. Going into next week, we have this massive impulse. So after an impulse, you expect a correction to at least the 0.382, and if you take your Fibonacci from the high to the low, you can see we got a perfect 0.382 that's lining up perfectly with this structural level over here. Going into next week, I am anticipating a pullback, and then from there, that continuation to the downside there as well. Now, the best way to approach this is to obviously wait for the market to pull back. Alternatively, if you're a scalper, you can always look for those selling opportunities. But the way that I will be approaching the situation is wait for the market to pull back to the 0.382, also to that level that is acting to this level of support here that's acting as resistance. And then from there, I'll obviously look for the market to start showing some signs of bearish momentum, and then start looking for that selling opportunity for the market to go and hit that neckline of the overextended W formation as identified from a weekly perspective. Next up, we do have the Dow Jones over here, aka the US 30, similar price action we got over here. The market had also just rejected this level over here. Now, if you remember that I have spoken about these levels how many times in the past, I told you guys we can expect this massive drop to the downside. Now, because it does look like the Dow Jones is creating a monthly, sideways movement similar to the one that we potentially had seen over there, and we can basically see similar price action taking place over here. So definitely a move to the downside for the market to go and test that previous level of support there once again as well. Here on the weekly time frame, what do we see? Now from a weekly perspective, it's very clear that we can also see the market had also broken below this very important price action level over here. This level over here acted as a level of resistance. Market broke above that, came to test it as support. Support did not hold, and we can see how the market is on its way to test that neckline of the W formation there as well. Now if you drop down on the daily time frame, what do we see? Now from a daily perspective, you can also see that we also have the confluence of similar structural levels that the market had printed, but the most important one is the one that the market is currently testing over here. This level acted as a level of resistance. Market broke above that, came to test it as support, and if you remember, this was a gap that the market still had to come and fill in, that we could potentially see the market fill in there as well. Now with this massive candle to the downside, there's two ways to approach the situation. We do have multiple structures on the daily time frame, and I would probably assume that this is the structural level that we need to look out for. It's very important that we monitor the price action to at least the 0.382. If you take your Fibonacci from the high to the low, there is a high possibility that the market is going to pull back slightly higher on Tuesday. And then from there, we're going to monitor price action once again to start looking for that selling opportunities to the downside for the market to go and test that previous level of support as identified from a weekly perspective. Next up, we've got the S&P 500 there as well. Now, the S&P 500, similar price action going straight down on the daily time frame. What do we have over here? Now, here on the daily time frame, we can see how the market is also kind of printing the same structural level. However, the market had not pulled down too far enough yet. So going into next week, definitely a further pullback to the downside, then a pullback, and then a continuation to the downside there as well. And this is how I will be making use of the situation, and boom there as well. And that is how we're going to do that also. Next up, GBPUSD. Now, because of interest rate hikes that's going to take place, we expect the dollar index to increase in value because higher interest rates normally attract investors. Now, when you expect a stronger dollar index, you expect every currency that trades against the dollar. So every currency that trades against the spot trades on the dollar index. So when you make analysis for the dollar index, you're basically looking at GBP, USD, Euro USD, USD, JPY, every currency trading against the dollar index. Now, if we expect the dollar index to increase in value, we have to assume that all currencies trading against the dollar index will weaken as well. Now, here on the monthly time frame, what do we have? We have a market that's currently trading in clean bearish territory, but that's not the end of the line because, like I said, the last time the market still has room to move to the downside to go and test that level over there as well. If you remember the breakdown I did last week, Sunday there as well. Here on the weekly time frame, what do we see? Now, from a weekly perspective, it's clear that the market has been violated over here. The market broke below the strong level of support, came back to test it as resistance. We can expect this market to continue lower there once again as well on the daily time frame. What do we see? We got a market that's currently consolidating. You can see how the market has just been moving sideways. Going into next week, a dip below that level of support that would then be turned resistance on the retest. You can definitely see yourself moving this market down to continue and hit that previous level of support as we just saw on a monthly perspective there once again as well. Next up, we do have Euro USD, similar price action. No need here for a full market breakdown because the correlation between the dollar index, the GU and EU, is about 93%. So we're basically going to go and say we're going to target that level there. Now, consolidation on the daily time frame, we're going to use the same approach because this is a level of support over here. We need to wait for the market to break below this level. Then on the retest of that previous level of support, that then be turned resistance, we're going to start looking for selling opportunities. So you can also see how the market is stuck between this previous levels over here as well. Next up, we do have a precious metal, gold. Now, gold also been quite bullish, and investors anticipated gold to look good. But I have done this breakdown for one of the members in the YouTube, that's part of the YouTube membership, and I explain all of the reasons why I can see that move to the upside and then that continuation to the downside there as well. Excuse me. Now it's time for a full update once again. If you start on the monthly time frame, what do we see? Now we can see that gold has not been moving anywhere based on a monthly perspective, but a lot of people have probably lost a lot of money. The market has been trading sideways, but we can once again expect gold to continue lower to fill in this monthly week, because we know when you see a candle with a 50% body to wick relation, and where you can measure that is by taking your Fibonacci from the low to the high of the monthly candle and see if the 0.50% lines up with this little candle over there as well, and that will give you a clear confirmation that you can expect the next candle to fill in the wick. Because when you get a candle with a body to wick ratio of 50%, this is basically normally a pullback on a lower time frame, and this is exactly what you see here as well. But it's unfortunate that this is not an impulse correction, an impulse to the upside. It's an impulse correction, an impulse to the downside. Now, if you take your Fibonacci from the high to the low, you can see how gold came to test the 61.8, also lining up perfectly with that previous structural level over there. And if you want to get our next target, you take your Fibonacci on the correction, and we can see we do have a 0.27. It's lining up perfectly with this previous level over here as well. Now, next up, we do have the daily time frame. And what do we have? Now, from a daily perspective, because we are going to look for bearish momentum or bearish situations here on gold, we need to wait for a clear break below this level. Now the market is currently back again to test this previous level of this level over here, acted as a level of resistance, broke above that, tested as support, it's back to tested as support. We need to basically wait for gold to dip below that level on the retest, start looking for that continuation to the downside. My good friends, I want to say thank you so much for your time. That's all from my side. Good luck for the week. Please let me know in the comments below what pairs are you looking to trade there as well. Thank you for your time, and as always, cheers for years.